Now, in order to make sense of what we've been seeing in the markets, not just today, but yesterday and the last couple of weeks, I want to bring on Brent Schutte. He's the Chief Investment Strategist at Northwestern Mutual Wealth Management. Brent, thanks so much for joining us today.
Thanks for having me.
So help us make sense of what we are seeing. Yesterday, it was an impressive rally. We were asking the question, why are investors so optimistic given all of the terrible headlines and news that we saw today? Obviously, today we get positive news from the JOLT survey, but on the flip side, alarming news on the OECD unemployment forecast, White House reiterating caps on stimulus. So what is going on? Are investors just confused, lost right now? Is there any room or hope for optimism?
No, I think there's hope for optimism. I mean, I heard the doctor express optimism on a vaccine or a treatment, which I think would ultimately pull back the impact the virus has on our economy overall and our markets. And so if you're an investor, you have to keep one foot in the market with that being a reality. Plus, if you think about the Federal Reserve, you mentioned the government possibly pulling back, but I'm not for sure that's going to happen. They did push forward possibly a $1 trillion bill before the election. And I think everyone needs to realize the Federal Reserve wants you to take risk. They are doing everything they possibly can to help the economy and to help the markets, and they will continue to do so. Jerome Powell has made that clear, and that's also a powerful backdrop. So if you kind of pull this back and forth with the virus and you add those two other things in, I do think it makes sense where markets are at. We've had a powerful run off the bottom. It will probably be more back and forth, but I think if you look out a year from now, I think the market's still higher than what it is today.
So I want to ask, I was reading your note a little bit earlier today, and I was getting the sense that you seem to believe that perhaps the worst is kind of behind us. So how bullish are you now for the rest of the year?
Well, think about where we've come from. And so that conversation you just had was all about different regions of the country with different opening policies. Think about where we were 3 or 4 months ago, where it was more of a broad nationwide shutdown because we didn't have testing. We didn't know much about the virus. We had just started with the vaccines and the treatments, and there was much doubt about where that was going to go. Think about where we are today and where the virus might be a year from now. And I think if you have that more as a backdrop, more so than the back and forth on the daily virus counts in different parts of the country, I think that's a pretty good backdrop when you combine it with my other two comments for the market to move higher in the next year or so.
So to that point about regionality, right? This morning in the Yahoo Finance morning brief, and for anyone at home that does not yet subscribe or receive that email, I would encourage you to do so now. There was talk about just that. So how much do you think of this is positive sentiment around the containment of the virus from abroad, especially when you consider that the 40% of the exposure in the S&P 500 essentially is international?
Sure. And international, some of the economies have handled the virus better than we have. And certainly they're further along in their quest to kind of tamp the virus down. You also have to bring into consideration what you mentioned earlier. Those stocks that are actually up are more virus resistant because they are allowing us to do the things that you and I are doing right now, which aren't impacted much by the virus or actually probably pushed forward by the virus. I think the other side of the equation is the more cyclical stocks, which as you think about the future, as you think about my comments about the virus and the impact, as you think about where those valuations are, there is opportunity there for people who have a time horizon of more than the next 3, 6, 9 months because they are cheap and valuation does eventually win the argument in the intermediate term about who wins and who loses.
So talk us through what you were saying in your note that you're worried investors might be investing with a rear view mirror focus. Tech doing incredibly well. Is it too much to put all of your, well, not all of your eggs, but to invest pretty heavily in tech going forward in the green today, even as all the major indices are in the red?
So I worry that people do invest in the rearview mirror. Having done this for 26 years, I see that happen over and over and over again. And one only needs to look back at history to see that this occurs in nearly every single economic cycle. So if we were sitting here in 1999, 2000, the conversation we are having right now would be exactly the same. Everybody wants to own tech. No one wants to own anything else. No one wants to own international. And what happened during the next expansion? That strategy was actually flipped upside down. Fast forward to 2006-07. Everyone wanted to own China. Everyone wanted to own Europe. Everyone wanted to own commodities. Banks were a big play. Think about what happened that you just mentioned in the last 13 years. And so we all have models, we all have forecasts, and we all take a close look at history because things do change in the next expansion. And I can tell you that if we're sitting here 10 years from now, we'll probably be talking about a different set of companies and winners than we are right now.
So last question for you, Brent. We've got earnings season coming up. Do you think we're going to be fueling some more gains there in a couple of weeks?
If you look at the economic data, so you opened with JOLTS, and JOLTS surprised the upside. And actually, one thing we should make, and I thought you were headed on this path, is that in the JOLTS data, the actual job gains were in the South and the West, whereas the Midwest basically had a few, and the Northeast had none. So if you think about what's happening now, that will likely switch. And that's why I do think the recovery and the market recovery could be hitting pause, just because you're going to see this rolling back and forth. As far as earnings, I do think that if you believe the economic data has been underestimated, it is quite likely that the earnings estimates have been underestimated also. And so probably volatility within the companies based upon who wins and who loses. But I think overall earnings season should surprise to the upside.
All right. Brent Schutte, Chief Investment Strategist at Northwestern Mutual Wealth Management. Thanks so much for today.
Thank you.